and welcome to the Advisors in Focus video series. In this episode, partnered by Nextgen and Frollo, we're looking at the open banking regime and how the new consumer data right could change the mortgage process. The 1st of November marked the second phase of the consumer data right, or CDR, as it extended to be applied to the mortgage data and the mortgage process. Currently, it's just for customers of the major banks, but can be volunteered by non-major banks too. But what does this all mean for the mortgage process and for mortgage brokers? Nextgen-owned fintech company Frollo was the first fintech in Australia to become an accredited data recipient under the CDR regime. And today we're thrilled to welcome to Infocus to walk us through what it all means, the founder and CEO of Frollo, Gareth Gumbley, and Nextgen's Chief Customer Officer, Tony Carn. Welcome, gentlemen, and thank you both for partnering with us for Infocus today.
Thanks for having us.
It's fortuitous timing, given the fact that the open banking regime has now been extended to mortgages through the consumer data right. And Frollo, as we mentioned, Gareth, was the first Australian fintech to become an accredited CDR recipient. What has this meant for Frollo?
It's pretty huge for us as a business. I mean, we're really about being a purpose-driven fintech. We're about helping consumers feel better about money. It's about them better understand their finances, understand the products they're using, how they're using their products, and then ultimately to bring about competition to help them switch to a better deal. Our focus has previously been using a technology called screen scraping, and we're moving to the consumer data right as a trusted technology put in place by the banks and put in place for the benefit of consumers. So we're really thrilled to be able to use this powerful technology to deliver much, much better experiences for consumers.
Okay, and so if we're looking ahead at what this all means for Frollo and for people using it, over the next 12 months as we move into phase 2 and phase 3, what can we expect to see?
So we're largely a B2B business selling our technology to banks. So we offer a software as a service technology, ensuring banks to offer our features to end consumers. So we're powering banks for the open banking CDR, the consumer data right, and then powering the experiences that they deliver to their consumers, whether that be improving the experience for lending, so we can automate the gathering of data. And we'll talk about that a lot today, I'm sure, because it's pretty important for the audience that we're here with. And we'll also offer features around personal finance management. So that's about bringing together the product information that a consumer is using and the consumer's transaction data and delivering insights and powerful experiences for that. So for us, where we're at now is really the very beginning. The November release is important because we bring mortgages and personal loans into the experience. So for the big four, we now have a good whole of picture share of wallet experience. But really, the 1st of July 2021 is when everybody really needs to be ready, because that's when the rest of the banks and the ADIs will come online and they'll be providing their data. So for us, it really is at the moment a lot of heavy lifting, helping banks get live for our own organization to test and build experiences. And then with our acquisition of from Nextgen, there's a lot of work that we're doing now into the lenders and into the broker industry. So it's pretty exciting for us. We're running, as a little fintech, we're running pretty hard at the moment. So we'll be looking forward to a break over Christmas. Yeah,
I'm sure you'll be well deserved.
Yeah.
And Tony, from a Nextgen perspective, obviously everybody knows Nextgen as the company behind Apply Online. What does open banking and CDR mean for you?
Look, I think from a Nextgen perspective, we saw very early on that this is a pivotal moment in the evolution of how mortgages are processed in Australia. And look, I'd like to say too, we're thrilled that we were able to have Frollo partner with us going forward on that journey. I think to try and put us into a bit of perspective, I like to look at the numbers around what mortgages mean in Australia. So if you look at just the last month, the month of October 2020, we saw over 130,000 mortgage applications in Australia, and that represents over $70 billion in value. And when you look further into that, you look at the typical processing costs of a mortgage in Australia. That equates to lenders on their own, spending over $350 million a month just in assessing loan applications. And when you look at brokers as an example too, lenders over time, one of the reasons why the broker market is so successful in Australia, because it's outsourcing the origination of a lender. And when you look at what that represents as a cost base to the brokers collectively, that's over $200 million a month in cost to process those mortgages. So looking at those sort of numbers, the opportunity that something like open banking brings along is a real way to revolutionise in time the way that we do that. So the way that we can get better quality data, get it digitally, get it easily, get it into the process, cut costs. And if you follow the money and where you can cut costs, it's a really, really big deal. And it's going to help things such as improving times to yes as well, customer experience, broker experience, and lender bottom line. So yeah, it's a really big deal.
And it's improving times because we're no longer having to wait for the customer to provide that information. It's a customer saying to an accredited provider, yes, you can access this data, and that's just done automatically. Is that where the time savings come in?
Look, there's a number of different ways around, using customer data. At the moment, a lender wants to get documentation to verify someone's income and to verify what are their liabilities, what are their assets and the savings, what are their living expenses and other expenses too. What open banking does is help replace, as Gareth touched on earlier, the type of screen scraping technologies out there that lenders don't usually accept as part of their assessment process. It puts a regulatory wrapper around the capturing of that. It's a regulated processes as well too. So there's great reliability in, that we're receiving certified information for a borrower. And then being able to use that to inform an application, there's a lot of efficiencies. We can start to remove a lot of the supporting documentation required, remove a lot of the more information requests and reworks, and be able to much better digitise and automate that approval process.
I'm also just really interested to know what everyone thinks about open banking, because we know from so many of our readers on The Advisor that there is a lot of confusion still around what it is and where it's going and what it could mean for the mortgage process. And I know that Nextgen and Frollo have released a report, just perfect timing for the second phase of the CDR regime, called The State of Open Banking in Australia. I'm sure you would have seen the news story on The Advisor and Mortgage Business. Looking at 161 representatives from across the banking, finance, broking, fintech industry, looking at what their sort of key thoughts and insights or what their real sentiment was towards open banking and CDR. It's a really fascinating report, so if you haven't read it, do make sure you check it out. You can find it in the link below. For you, Tony, what were some of the sort of interesting or surprising findings of the report that you noted?
Yeah, look, it's a great report and there's so much data there to read. And I do encourage everyone, whether you're an individual broker, whether you're an aggregator, whether you're a lender, read through it. It's really informative information. At a high level, I would say, one of the learns out of it was, I think it confirmed a lot of what we observe in the market already. I'd like to probably hone in on one interesting piece where we saw, for example, in the broker market, a high level of interest in recognising the benefits at an aggregator level, and a very strong interest from brokers, individual brokers, in around how useful the information was, but a low appetite to be investing in that and seeing that become incorporated in part of their process. And I think that in itself is not a negative. I think it's reflective of where consumer awareness is around open banking and the consumer data right at present. And so I think it highlights too, there's a great opportunity there really for us to improve consumer awareness and learn what the benefits are that can be delivered out of that. I think it also highlights to us at that higher level of, I think the aggregation groups are very engaged in what the benefits are and a willingness to invest further in that process and what it does. And also what we saw from the data is an interesting, that sort of first adopter leader approach being reflected in the data of lenders who are saying, we're going to invest in this early and take a leadership position. And I think, that lender leadership will really drive a lot of take up over time.
Yeah.
So yeah, it was very, very, very interesting data.
And Gareth, for you, what were the sort of the main findings that you thought were either really interesting or maybe unexpected?
I think a lot of it, as Tony mentioned, we're in deep conversations with lots of banks and fintechs on a daily basis. So I think there was some interesting points in it. One thing that was exciting for us was that 70% of the respondents were looking to adopt and become an ADR, an accredited data recipient, within the next 12 months. And I think that's particularly exciting because I think there is a need for people to get on and embrace the technology and the opportunity and understand it. The learnings we have from the UK were that it wasn't until we saw more use cases and we saw more experiences for consumers that deliver a better outcome that we see the adoption and the take up, and that's where the investment comes. So with everything, you need some early adopters, and it will be a slow evolution, and most of the respondents in the report expected that we won't see kind of a critical mass on the consumer data right for 3 to 5 years. So we're really in that very, very early days. And as I mentioned, that they're big findings. Some of the other exciting things were just around what are the use cases that people are looking for. What are they going to drive towards first? And Tony and I both mentioned the first one, which is this income and expense understanding of essentially the state of their financial situation. Affordability report. There are lots of different names going around for it, but in essence, what it really is just how can we better and more streamlined way capture data to assess a loan. But I think what's important and exciting is that people aren't just looking at it as it's a one-time data request, which is kind of the current experience. It's this data can be refreshed 6 times a day, every time somebody comes into an app or onto a website. And then now what kind of insights do we get to see? We get to see someone's life evolving and unpacking and changing, and those life events starting to evolve. And I think that is what is going to be really exciting for brokers and in this segment, is when they start to understand, what does it mean to see the real-time data and have a much more dynamic relationship with the customer than they've had previously.
It's interesting because I know, for example, with some of the issues or headaches that were caused by the responsible lending laws, which have been recently proposed to be repealed, it was around some of the examples. For example, some of the examples were around someone maybe getting a promotion and their job changing and then having to redo their mortgage application because of that. Would open banking and the consumer data right mean that if something like that happens, you wouldn't have to go back to the customer to redo that process? You could just sort of use the CDR data to do that automatically?
I think it's an interesting one because we're still in process in terms of understanding what that really means around responsible lending. But what I see as the opportunity is we've gone through a pendulum of, it was the consumer's responsibility to now it's the bank's responsibility. Now, maybe with data, we can assume that the responsibility is for both parties to represent their financial situation truly and fairly. And we can use data to underpin that decision that we have against it. And then the opportunity comes from being able to see more real-time data that we can move risk-based pricing. We're seeing Athena, in a home loan experience is, become much more dynamic in their pricing, much more responsive. And I think CDR really amplifies the opportunity for people to innovate around product to support that.
Oh, interesting. And Tony, for you, what were some of the are there any case studies maybe we can think about for how brokers and aggregators particularly can use open banking? Are there any sort of the most valuable areas of it for them?
Yeah, there's a number. I think the fact that it's such strong and reliable data and real-time data, it's also the use case to be able to further digitise the application process. I mean, and this is an important point. A lot of what we will see going forward with open banking is around evolution and change management and changing processes and evolving that process. If we go back 15 years in time, there was a very low appetite to say, I will never do a digital mortgage application. And people said, I would never have a personal computer. Would I ever use a mobile phone? And these things are going to definitely be evolving. So that digitisation of the process will get deeper and further into the application. What Gareth touches on, though, is that this is about data over a time series. Someone may do it. It's not just about the application process. We see more and more consumers taking up and adopting this. We have, Gareth, I think 120,000 plus users of the Frollo app already. So that's very valuable. Consumers are already accessing this data. What it allows us to do going forward is to actually start building customer profiles. So you can have your own financial profile. And what's important from our perspective is how that data can be utilised and integrated into the application process, how a broker can actually handhold someone throughout the financial journey, which may begin years before doing an application as well, through, for example, a personal finance management app. It's a great opportunity. And I think too, Gareth touches on a very important point. We are seeing a bit of an evolution there where we're seeing, people going, responsible lending's being sort of repealed. But it's a pendulum swing. And I like to use the term going forward, what's really important is responsible borrowing. And I think it reflects, what are the responsibilities with BID going forward as well too. So, we've got better data, we've got a better digitalisation. We can start looking at consumer profiles, which are really, really useful over time and really assist in the BID process.
Well, you've mentioned BID there, the best interest duty, which is coming into effect on the 1st of January 2021, as I'm sure everyone already knows. So only a couple of months away. I just wonder, from a BID perspective, a best interest duty perspective for brokers, what do you think this will help them do? Will it help them achieve their compliance with BID, for example? Will it help them provide that sort of best interest opportunity for their clients?
Yeah, absolutely, without doubt. I think one of the great opportunities that open banking, for example, presents to a broker is the ability to have a journey with a customer. And that journey may be getting what I call finance fit. Understanding what are my expenses, what serviceability can I have, what savings do I need to do to get ready for that. And then having very rich data is being able to take a lot of friction out of the application process, which again means lower costs for a broker, lower costs for a lender, and a faster time to yes, and a better overall experience. And of course, there's a lot of ingredients in making that great application cake, and one of them is regulatory requirements. And I think it works very, very well for BID, and that concept, as I say, it's about responsible borrowing, and the onus is on the borrower to making sure that they have access to their data and understand what they're doing properly. And I think there's a responsibility too, although it's already being done in the broker market, to make sure that the customer's hand is being properly held and they understand what they're doing and then what their responsibilities are in that process.
Yeah, so making people more aware of their own financial footprint and what they look like as a borrower before they even apply, without having that sort of just handing over paperwork and being like, hope for the best.
Absolutely. And remember too, with responsible lending, there is still an APRA requirement, for lending standards. So it's more of it's a shared issue across the broader spectrum now.
Yes, just sounds bad, but isn't actually bad. We're not removing responsible lending, just the specific regulation potentially. Gareth, from your perspective, obviously you mentioned there the UK earlier. They already have open banking in place there. What sort of experiences have you learnt from how the UK went through open banking that we can put into place here in Australia?
I think one of the important things we learned in Australia when Scott Farrell did the initial report was to make the consumer data right a much broader experience rather than what is in place in the UK, which is currently open banking. So the difference between open banking and the consumer data right is the consumer data right spreads across industries. So what we're seeing is banking going first, we're seeing energy and then telco following. And then we have an interesting exercise that's going on at the moment in consultation around the ability to do right access. And so I think the things that we're doing right is, we're thinking about this much more about what is good for a consumer and how do we protect their data and how do we ensure that a consumer can share their data in a trusted way and in a secure manner, and their data will be protected as if it's sitting in the bank. And I think it's important for everybody to really understand that the experience that you go through to provide consent for open banking is very much like that of providing consent and using Facebook as a log-on or using Google sign-in. And so it's a sort of a bank experience that you move into. So Frollo hands you to the bank. You're very much inside Commonwealth Bank's environment. You're entering your registration number there. They're sending you a text, a one-time password that comes from CommBank, and then you're entering that into a CommBank website to say, okay, I do agree that Frollo is going to get this information. Frollo is going to see the data for this period of time. It's going to use it for this experience. Both parties, both Frollo and bank, are agreeing to those terms. And so I think it's important for everyone to understand that that is very, very secure sharing of data and requires organizations to really protect the consumer's interests. And so for me, I think we've done a very good job of implementing the framework for the long term. We have a lot of work to do in terms of making it easier for the tiered accreditation. So organizations like aggregators or brokers get access to the information, they can see it. But they don't necessarily need to hold it and build all of the technology that we had to go through, jump through all of the regulatory hoops to get there. So I think that's the piece we really need to work on, and that's very much a consultation process that we're participating in at the moment is, okay, can we get this to a point where we've got some level of tiered accreditation that means it's we all understand this is important, but we all need to use it and see the data to deliver a better experience to consumer. Otherwise, we won't deliver the end outcome, which is better customer competition and better environments and better experiences.
Yeah, so it's really important that everyone actually
get that. Yeah, that's right.
Uptakes.
Yeah.
And it's interesting as well to talk about security, because we know we've been hearing so much around the increase in cyber threats during COVID, everyone moving online. There's a lot more malicious attacks coming on as too, and people still maybe sending their financial data via email and attachments or whatever systems they're using. Hopefully then CDR will make this much more secure and provide a much higher level of encryption too.
Yes, yeah, absolutely. Yeah, I think it's hopefully the days will be gone of the statements in the brokers in the boot of the car.
Yeah.
My broker had 3 years later, I said I need to refinance, and he said, "Oh, don't worry, I've got your bank statements in the boot."
Nice.
So I think I think we can bring some technology experiences into that, which make it much better for the consumer too. I think there's an interesting point that the consumer rarely understands what does it mean to look at my finances, and then how is a bank viewing my finances? So how do they categorize my spending, and what do they look for that is a risk that I shouldn't be doing, and trying to pre-warn that, and we can build education around that. So, will there be a big backlash if I've had lots of Uber Eats in the last month, and what is good and good spending, and what's bad spending, and what does the bank look for, and we can start to build those kind of tools and experiences in the, for example, in our personal finance app that we offer. That is a good example of, okay, well, now I can better understand my finances to behave better, so I can get to, ultimately I don't want a mortgage, right? I want a house. So how do I get my house?
Yeah.
Help me get there, please.
Tracking your Wagyu and Shiraz intake. Yeah.
Yeah. Tony's much higher than mine.
So Tony, if we actually look at where CDR is now, we know that we're going still through the consultation for what intermediaries can do and how that works. Actually, Gareth, earlier you mentioned right access. I should ask, that's WRITE, right? Not just reading the data, but actually being able to access it and use it.
Think about that as the ability to move funds. So, for example, you could be in a personal finance management app. You may have a bank account with CommBank, you may have a bank account with NAB, and you want to move money from one place to the other. Today, you would need to leave the personal finance app. You would then need to go to Commonwealth Bank, do the transfer, then you log into NAB to make sure the money moved. The right access experience is I can be in another branded experience. That could be Frollo, that could be anyone else who has a brand and a relationship with the consumer, it could be a broker. And then they can move the funds from within that experience and say, okay, I'd like to securely move from CommBank to NAB. And that will all occur outside of needing to go to either of those banks. And what that means is we start to deliver some really powerful experiences where I no longer need to open my banking app, right? And I think that is, for me, that's pretty exciting, because that really then starts to say, okay, well, you as an incumbent no longer get to hold on to me forever. You need to provide better service and better value. Otherwise, somebody else is going to build experiences around you.
So really fostering that competition.
Yeah, exactly.
Tony, so looking at what brokers can do now, we know there's still a consultation going through about what intermediaries can actually do and what that looks like. What should brokers and aggregators or lenders be doing now to prepare for CDR if they're not already?
Yep. Look, I think from a broker perspective at the moment, the first and current opportunity is growing awareness, understand what's coming. And I'd like to point out there too, I think what we're seeing at the moment is we're starting to see already emerge the early adopters in the lending space, for example, and they're investing already, and we've seen that through the survey as well, through the study. And what we're going to see is them come out in the next short period. I'm talking probably 18 to 24 months, potentially, maybe as early as 12, as the early leaders, and offering some great ways to enhance the application process. So I think education understandings is a very important point there. And I think remembering too that whether it's the broker down the road, the broker across the road, the lender that's sitting in a local branch or a mobiler, or someone in a call centre taking direct to lender inquiries, they're going to be doing that as well too. So there is that Darwinian risk that I remind everyone, don't think that this is going to wash over you. Look, I think, though, it's going to be a bit of a carrot rather than a stick approach as to uptake. And I think it's going to be driven largely in the future from those that have the most to benefit. And I think lenders are the ones we're seeing invest there to make the tools available. So adoption of those tools will be important. What we also see, though, is, I think lenders have to question their readiness. And that's a key thing going forward. Is my platform fit for actually evolving into the new world of open banking in the future? Are the tools I'm using fit for purpose? Is the advice I'm getting and the people I'm listening to actually going to make the grade? Is a fair point as well too. This is not an opportunity where you can think, oh, we'll be right, sort of, mate, and they've done it for us in the past, it'll be okay. And I think the main piece I would say to everyone is buy versus build's a big question. I think talk to a specialist, talk to the expert that knows this, because it is complex, and there's a lot of there's a lot of build, there's a lot of regulatory requirements that Gareth can attest to. So there's sort of off the shelf things going forward too. So yeah, invest in that engagement early.
So Gareth, can you provide us with some sort of picture around the regulatory requirements, all the headaches that maybe some lenders might face, and what they should be doing now to prepare for the CDR?
Yeah, sure. I think so. The key requirements are you're effectively trying to get yourself to an accredited perspective, which is I am as good as a bank with this information. So things like ISO 27001 is a starting point. There's a ISAE 3150, which is another mouthful of an experience. Both of those are really audit requirements around your processes and your policies on how you manage your organization. How do you look for, when you provide terms and conditions, how many people have signed that off? Have you had that checked? Where is the data stored? What is the data boundary? How many people can see it? If you derive data from that original consumer data, so if you create a report from that, that is still consumer data right data. You can't then just publish that. So you really have to fully understand what it means to protect and look after someone's information as if it's your own. Would you want your own information published in that way? So I think the processes and policies are a big lift for most people. The data definitions are pretty challenging, on the data boundaries, pretty challenging to get your head around and how you look after that. And then you need to have the service and the ability to be able to keep that up, the entire time. So once you've put in the technology, it needs to make sure that it runs at 99 and 4 nines, and it runs like a bank and behaves like a bank. And so that's really why Tony sort of refers to the buy and build, because it kind of looks like it's all published standards, and you could build that. We can attest to that, costing us millions of dollars to find a way through. So it's a combination of people, process, and technology, and you need all of those to come together really, really well to become an accredited data recipient under the current regime. And that's really why there are so few of us through at this stage. So we've really got to look for ways to leverage the existing ADRs, so coming to those that have made it through, to provide technology and services to others to help the ecosystem flourish in the short term until we can find other ways to protect data, and make this a more simple, more streamlined process for people to get in.
Yeah.
And don't get me wrong, I mean, we really want as many people in this as possible, because ultimately, the more successful use cases that come into market, the more better consumer experiences that occur, and the more adoption we get, and we'll be able to foster I think better outcomes for Australians for the next 5 to 10 years.
So there are 4 data providers of 4 major banks, as well as some first mover non-major banks, as well as 5 data recipients under the consumer data right at the moment. So we need a lot more take up before we can really see this competition that Gareth and Tony have been talking about. But it seems like for brokers, lenders, aggregators, and the consumer at large, there is a lot of opportunity under the scheme, and we look forward to seeing the cases as they move forward and how they can apply in real life. If you're interested in finding out more about open banking in Australia, then do make sure you check out the report, which can be found in the link below, which Nextgen and Frollo have put out this month. And also do register for the live webcast that we'll be holding on our sister title, Mortgage Business, called The Advent of Digital Mortgages, if you're interested in finding more about open banking and how it can apply to mortgages. You can also get your questions answered at that live webcast too. I hope you found this informative. Thank you both, Tony and Gareth, for your insights today. We look forward to catching up with them soon for the live webcast. Thank you all for tuning in. We'll see you soon.